seeing the recording. Um, so we said that last time we started talking about accounting changes, okay? And I'm trying to provide a quick reminder of what we discussed in the first part, okay? So remember what we said, we got actually different um, type of accounting changes, okay? So we got the accounting changes when it is about changing accounting policies or when it is about changing estimates, okay? I guess we just stopped in changing accounting policy, okay? So what do you mean by changing accounting policies? So this is the sole, let's say, situation where we can talk about changing accounting policy is where we change from one accepted accounting method or policy to another also accepted accounting policy. Okay, so we give the well-known example of, I don't know, switching from the average cost to the FIFO method, or switching from the cost recovery to the percentage of completion method. Okay, um, so these are the situations, of course, where we can talk about changing accounting policies, and of course, because of uh, um, this change in accounting policies, always estimated to not to be really often. Okay, so businesses they are expected to continue using, for example, the same accounting policy over times. Course, if they want to change, they are allowed to, but of course they have to provide really strong motivation regarding their choices, and of course explain why, for example, the new accounting policy is preferred against the old one. Okay, and of course to make sure that we will have financial reports that they are consistent over time. So the FRSs require specific treatment when a business decides to make that change. Okay, the specific treatment is what we call the retrospective approach. So what do you mean by the retrospective approach? So simply put, we'll have to go back to the prior periods, recast financial statement as if the new method was also used in the prior periods. Of course, we have to recast and adjust, of course, line by line, all the items that are affected by that change. Of course, when we are providing comparative financial statement, this is what we do. So for every period, we have to proceed with that change. And in addition to the fact that the effect or the cumulative effect of that change, as if, of course, the new policy is applied in prior periods, it will be what? So the effect on net income, of course, will be net of taxes, will be what? Will be shown as an adjustment also to the beginning balance of the retained earnings of the earliest year presented. And this is what we do when we have a change in accounting policy. So please, again, we have, for example, if you, I don't know, you mistakenly, oh, this is what I'm saying also, you, for example, for research and development costs, you use it to capitalize them while, for example, no economic viability was achieved. So you are making a mistake here. So if you are switching from capitalizing to expensing, or the opposite, and of course there is no uh, um, background or evidence, of course, of such, of course, a treatment, it wasn't really correct. So you are here correcting for errors, not changing accounting policy. Okay. Okay, good. um so that's the change in accounting policy. You have seen already examples regarding how to change or how to treat this to use this retrospective approach. One can also, I don't know, ask the question, why may businesses, of course, think about changing accounting policies? Well, it's not always, of course, that, I don't know, rational motives, because, of course, we are looking for providing more relevant information, etc. We got, for example, some motivations that are what we call um, related to, let's say, for example, political cost. So what do you mean by political cost? Um, just one moment. I will just to go to the next section. So what I meant by political cost, still showing my screen.
No, man.
Okay, I'm sorry. We'll just do it again. So what is it? What is political cost? So political cost, meaning that we talk about political cost when there is a firm, of course, that is under pressure or showing really higher visibility, of course, from in their external environment, and of course the visibility from politicians, from maybe rivals, etc. So businesses tend to what? Tend to use some accounting policies that are likely to what? To reduce their net income. Okay, so maybe they will, for example, opt for the average cost and not the FIFO method, for example, to end up with a net income that is lower than what it should be. Okay, so this is of course to avoid this political cost, to avoid the pressure from external communities, from the external environment, from tax authorities, for every, of course, body or institution, of course, interested in that, of course, firm or business. Firms also or managers may also decide to change in accounting policies, for example, to have higher net income if they have, for example, I don't know, a higher credit risk. The ratio of, for example, debt to equity ratio is higher, so they want actually to what? To reassure investors, to also provide a good signal to the creditors, to the fact that they are really profitable, and they have, of course, they are able to meet their commitment and the debt covenants, etc. So they are likely to use some accounting methods that are, for example, likely to increase their net income. For example, using the percentage of completion method instead of the cost recovery method. You can also make such choices to smooth, for example, your net income. So what do you mean by smoothing? Meaning that you will keep a stable rate of growth of your net income, because sometimes in one year you may really realize a high growth in your net income. The next year it will be really maybe the opposite. Okay, so it's this kind of volatility is not really good signal to the capital market. So what do every time we do, of course, as managers, that we need to provide the same level of growth. So here we are also in the spirit and the logic of providing good signal to capital markets, avoid this, of course, issue of volatility and uncertainties regarding the net income growth, etc. Also, businesses or managers may opt for changing accounting policy, for example, if they, for example, they have their bonuses, for example, they are tied with the net income. So, of course, what will be beneficial for them is that they will have to provide or realize or show higher net income, because of course they will get higher bonuses. Okay, so you see, we can have really many motivations that are not, or that are they don't really relate to the fact that we have to favor the relevance and the faithful representation of the reality of the business. Okay, so for that reason, of course, and IFRS is of course require that retrospective approach to let's say limit that kind of behavior. And even though you are, for example, switching to the FIFO method or to the opposite, to the average method, you will have to go back to the prior periods and of course recast financial information based on this new method, so that of course investors will have consistent information over time, so they are likely to compare net income of prior periods as if of course the new method was already applied. Okay, so that's one of, let's say, important pro or advantage of using the retrospective approach. Okay, so it will let's say limit the misleading, of course, information or misstated information. Okay, is that clear, please?
Madam. Hello again. First, I wish you a quick recovery.
Thank
مدام
you.
مريم سألت a question في الشات وأنا زاد عندي question.
Of course, go ahead. ليه خاطر مش قاعدة نتبع في الشات، خاطر كان باش نخرج من
مريم
الشات.
قالت لك
قولي.
do we always need a positive difference to make an accounting change?
No, it's not always a positive. يعني احنا أنا I just give the example of you are trying to reduce your net income. Okay, So this is, for example, yeah, you are making really high net income and you're deciding to reduce it to smooth it maybe, okay? So that's not really a positive change, any meaning, of course, of increasing, okay? So we have the tendency to provide the opposite or the lower, yeah, amount, of course, of net income with, as I said, with this motivations is that you are avoiding, I don't know, كما قلت, political costs, you are avoiding paying taxes, etc. etc. Okay?
اوكي.
Okay, مريم قالت لي it's okay.
مادام أنا السؤال متاعي على سلايد 32. وقت اللي قال يحكي على الإفكتس الدايركت والإندايركت إفكتس، يعني وقت اللي الأكاونت change in accounting policy effect الكورنت والفيوتشر يعني statements، وقتها نقولوا indirect، وكان وعلى الباست يعني نقولوا indirect.
لا 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 احنا of course we didn't really elaborated on this, but just for your information, when we talk about direct effect, for example, ديما نرجع most simple يعني examples, whether for the inventories or حتى for revenues, etc. Okay, so the direct effect is that, of course, that, for example, change in one accounting method, for example, for inventories, the direct effect will be on what? Will be on inventories, for example, ending inventories, and on the cost of goods sold. Okay, that's a direct effect. And kif, this direct effect, when you have, for example, differences regarding the cost of goods sold, so net income will be different, and then, of course, your income taxes will be, or payable, of course, will be different. And that's why, of course, we have, for example, to debit or credit for deferred tax liability or deferred tax asset. Okay, so this is the kind of direct effects. Okay, so what he said also is that for the indirect effects, the situations اللي هي يعني in general IFRS didn't really provide or assistance on how, of course, to treat them. So first of all, what is an indirect effect? كنرجعوا, for example, قلنا you are using this valuation method for inventories. So the direct effect is that the ending balances of ending inventory and the cost of goods sold will be different. So the effect on net income, of course, will be different. And we have also the tax effect that is considered to be direct. What is indirect, for example, is that you are, as I said, providing dividends, for example, based on that net income, the old one. Okay, so of course you won't go back, for example, and adjust for any dividend payable, etc., based on this new adjustment or this new change in accounting policy. Okay, so that's the kind of example of indirect effect. Donc احنا نقولوا indirect effect is not, of course, taken into consideration, of course, in this retrospective approach. يعني احنا the focus more when we go back and adjust the prior periods. قلنا line by line. It's in particular when we talk about the direct effects, يعني the accounts and, of course, the balances that are directly impacted by that change in accounting policy. Okay.
I got it. Thank you.
You're welcome. So the impracticability issues already okay. So of course we talk about retrospective approach and go back recasting prior periods, of course, whenever it is possible and to the extent possible. If we don't, it is impractical, meaning we don't have enough details. We will have to make estimates. We'll have to let's say not being able to objectively provide, of course, information or reliable data regarding that new standard, of course, or new policy, not standard, but new policy in the prior period, then we have just to limit to the prospective approach. So we have actually exceptions, as I said, to the retrospective approach. So whenever it is not impossible, whenever it will involve substantial estimates or subjective, of course, estimate, etc., we can just use the prospective approach. And of course, we have to provide all the details regarding this impracticability in the additional disclosures. Okay, so now we'll discover together what the change in accounting estimates, of course, and how it is different from the change in accounting policies. Okay, So remember, in accounting, we have really to make many kind of estimates, like when you have to, for example, measure the uncollectible or the percentage of uncollectible, of course, doubtful account. So bad debts, they are estimated every period based on what percentage of credit sales or percentage of receivables. So still they are just, let's say, the best accurate measures or estimates, but they are likely to be changing from one period to another. You have also estimates regarding the inventory obsolescence. Remember, the lower between cost and net realizable value, the approach that we already learned in the first semester in the intermediate one. Okay, so when you have also to you decided, for example, for your plant asset, it has useful life of 10 years with that, of course, specific residual value. And then after a period of time, you have new information, you have a new situation telling that the useful life will be different and the residual value too. Okay. When you have, for example, deferred costs like startup costs, etc., and of course the period over which you will have to amortize them, etc. Okay, the liability for warranties and income taxes, the recoverable mineral reserves also, they are estimates. You are changing, of course, in depreciation estimates. You have also changes in the fair value of financial assets or financial liabilities. Okay, so for this kind, of course, we're just providing out the most, let's say, common situations when, of course, or where accounting will proceed with this kind of estimates. Okay. Um, so again, estimates that are made in one specific period of time, and when they are made, of course, based on available information and experience and etc. So they are supposed to be done, as I said, in good faith. They are supposed to be the best accurate, of course, estimates in that period based on the available information and the experience, of course, accumulated. Later on, when we got new information, when we have, for example, additional experience, etc., and of course, this new information will oblige us to uh, change this kind of estimate, of course, to report or to reveal more relevant information, etc. Then, of course, we have to proceed with. Okay, but again, if we are like to make this change in accounting estimates for IFRSs, we are not obliged to follow the retrospective approach. So we have just to report prospectively that kind of changes. So what do you mean by prospectively? Meaning, for example, if this accounting change will affect only one period, then this, of course, current period will only show this new estimates. If, of course, this change will, for example, impact the current and the future, then, of course, we have to continue or to apply the change in the current period and continue, of course, with this new estimates for the future. Okay, so when we talk about the prospective, so here there is nothing to do with the prior period, so it's always about the current period and the next ones, of course, if the change will affect, as I said, the period of change and the future periods. Okay. So the ISB here said that it views the changes in estimate as normal, recurring corrections and adjustments. So here you see it is normal. There is nothing exceptional, as opposed, of course, to the change in accounting policies. Change in accounting policy, as I said, it's considered to be rare. It's not often. So when business decide, because there is really, of course, in theory, major and important, of course, motivation to do so. Okay. So here, normal correction, adjustment, etc., that are likely to be recurring often in every period, etc. So that's why, of course, we cannot use the retrospective approach. So here, every period will have its own maybe estimates. It's possible that we won't change, of course, our estimates during that period, or of course, if we have changes, of course, we have to apply the prospective approach. So let's see the example. And again, this is the kind of exercise or just a brief exercise that's taken from the freshman course. Okay, so here we got what Arcadia purchased the equipment for 510, which was estimated to have useful life of 10 years with a salvage value of 10 at the end of that time. the depreciation has been recorded for 7 years on straight line basis. And then in 2019, so that's the year 8, the firm determined that the total estimated life should be 15 with a salvage value of 5 at the end of that time. So you see here, at the beginning, when we purchase, we make estimates regarding the economic life of that asset. We have also estimate about its residual value at the end of that useful life. And then later on, we use that asset, etc. We got maybe, I don't know, when we say new information, it will be about, of course, the service life. It will be about maybe based on the maintenance that we did for that asset or our usage, etc. Excuse me. So this kind of course of change in estimates is likely to occur, of course, often, okay? So if we are in that situation, so the first question here said, what is the journal entry to correct prior year's depreciation expense? How can you answer that? Is there any journal entry that we need to make to correct for this prior year depreciation expense? Because remember,
No.
we depreciated that asset over 10 years on straight line basis, of course. So we used this 500 less 10 over 10. So we got this annual depreciation of 50,000. That was done, of course, for 7 years. So good. There is no correction because, as we said, the change in estimates will just happen in the current and the future. So we don't go back and change any prior year's depreciation expense. Okay, so what was recorded in the prior 7 years, it is of course considered to be correct. Nothing, of course, to do with them. Okay, now if we want to apply, of course, that change in estimate, this change, of course, is decided in 2019. So we have to apply that change in the current period, and of course in the next maybe periods, because here we have still we will have how much we have 8 years, of course, to go for that, of course, depreciation of that asset. Okay, so to be able to measure the new depreciation expense, we have actually to have the book value at the year of the change. Okay, so how we measure the book value, remember, it will be the original cost less the accumulated depreciation, of course, till the date of the change in estimates. Okay, so the annual depreciation, as it is here measured, you see here, we got a depreciable base of 500. It was depreciated over 10 years using the straight line method. So every year was, of course, a depreciation expense was debited, and of course accumulated depreciation was credited over 7 years. So the accumulated depreciation till the date so before, of course, the adjusting entry of 2019 was 350. So the book value is 160. So when we got this change in estimates regarding the useful life or even the residual value, we'll have to what? To consider this book value as if it is the new original cost for that asset. Okay, so as if we have a new asset with 160 as original cost, and of course a remaining useful life here of 8 years. Okay, so the new depreciation expense will be, of course, as I said, 160. That's the book value. Don't forget to reduce it with any residual value. So it said that we have a residual value of 5,000. So the new depreciable base is 155. Well, how much we have useful life? We have remaining 8 years. So the annual depreciation, it is 19,370. Okay, so that's the journal entry for 2019. So we have to debit depreciation expense and accumulate depreciation with that amount. Of course, we'll continue doing the same journal entry over the remaining, as we said, 7 years, the future 7 years. Okay, so that's the prospective approach. Okay, you see, so nothing to be done for the prior period depreciation expense or other types. Okay, so in addition to that kind of treatment, اللي هو prospective, we have also to provide some information in the maybe notes disclosures. Okay, so company should what? Disclose the nature and the amount of a change in an accounting estimates that has an effect in the current period or is expected to have an effect in future period unless it is impracticable to estimate that effect. So as I said, you have to tell what is the type of the change, the nature, and with which amount, of course, and how, of course, it is affecting the current period and also the future period if it is will be impacting, of course, future period to the extent possible, if it is practicable, okay? Companies will not disclose the changes in accounting estimate made as part of normal operations, such as bad debt allowances or inventory obsolescence, unless such changes are materials. So when it is about, for example, لكن هنا نحكي على change nature, the change in accounting estimates, for example, على change in useful life or حتى residual value of assets, that's kind of information that we need details about it. But for example, if you are changing your bad debt allowance, for example, the percentage, it was 5% of credit sales, ورديتها بعد 7% or 10%, or you are also this, of course, applying the lower between cost and net realizable value. So the net realizable value of your inventory, for example, is changing, etc. So you have, of course, you are not asked to provide more details about that kind of changes, unless, of course, you are really having material changes. For example, debt 5% كانت 20%, for example. That's really substantial, or even the 15, etc. So whenever it is material, it is important. You have, of course, to provide details about it, okay? And of course, why, of course, this requirement? So because here we are trying to provide this complete or full disclosure, full information to investors to be able, of course, to value or predict, of course, the timing, the uncertainty, and the amount of future cash flows of that firm, okay? Is that clear, please?
Yes, clear, ma'am.
Okay, good. So the third here learning objective, it's about how we treat the accounting errors. This is, as I said, the most, let's say, not let's say hard but tricky part in that chapter, okay? It's because you'll see that we have this part, and then we have also additional slides related to the accounting errors, because you see that we have really situations that they are there will be, of course, having effects, of course, on our treatment of that situations, okay? So before we go in depth, of course, in that accounting for errors, so let's just highlight how can we qualify if there is an accounting error or not, okay? So remember, when we have a change from an accounting principle that was not generally accepted to an accounting policy that is acceptable, so this is considered to be correction of error. Remember, in the prior session, I just gave the example of you use it to apply the LIFO while the LIFO is not permitted under IFRS, and then you change to the FIFO. So this is a kind of change that is qualified to be change in accounting errors, okay? Or a correction of errors, I mean, okay? If you made any mathematical mistakes, okay, and then, of course, you detected that mistakes, and of course, you will have to correct for that. We'll see, of course, what kind of treatment and in which circumstances, okay? If you have also some change in estimates that occur because a company did not prepare the estimates in good faith. So here we have a problem with your estimates. I don't know, you were not really good as an accounting. You had, for example, that responsibility to provide these estimates in good faith, and of course you didn't do your job as it should be. So you have, of course, to provide the correction regarding these kind of estimates, okay? When you, for example, fail to accrue or defer certain expenses or revenues, so here we call about omitting some adjusting entries, like for accrued expenses or accrued revenues. When you misuse the facts, so I don't know, you have, you don't have, again, for example, the economic viability is not achieved, and still, for example, you decided to capitalize this, for example, a research and development cost, and then, of course, you have to correct for that situation and go back and expense them. Or when, for example, you recorded purchase of asset as expenses, or the opposite, etc. Okay? So as I said, this is the incorrect classification of a cost as an expense or an asset and vice versa. Okay, so we got many situations that we can talk about errors that are committed, and of course in this kind or in this kind of situation, what will be the accounting treatment? So we will have to proceed with corrections. Okay, so here we have some types of errors, and you'll see here just illustration and a quick summary on how we will deal with that kind of course of errors. For example, if we failed to accrue expenses, so we didn't really follow the expense recognition principle. Okay, so example that what you will be recording expenses in the incorrect period or for an incorrect amount. Okay, so that's the situation. Okay, we'll see of course later on how to adjust for that situations. Okay, when you have also error regarding revenue recognition. So for example, sometimes you will improperly recognize revenues. For example, you recognize revenues while you will have to recognize it as an earned revenue, or the opposite, etc. Okay, or also of course you will be misreporting revenue, so you have problems with the numbers that you are providing. Okay, misclassification, of course, هنا this is really simple errors. Okay, for example, an asset that is a current asset, you classify it as non-current account, etc. Okay, so that's of course we'll have to correct for that, because this misclassification will have an effect on many ratios. Okay, so that's of course we cannot really omit this kind of situation. You can have also accounting errors related to equity, like you have, for example, improper accounting for the earning per share, for warrants, other equity instrument, etc. When you have also some errors that are related to accounts receivables, bad debt, inventory reserves, income tax allowances, and loss contingencies. So it's possible that هنا راهو نحكيو على this table just to tell you that errors can really impact all the, let's say, accounting items or account or sections, etc. Okay, so for example, you have maybe recognized any asset impairment of property, plant and equipment, or also you just, I don't know, depreciated the goodwill. So this is a kind of error that of course it must be corrected for. We'll see of course with the specific situation, because you'll see that we have to respect some guidelines regarding the correction of errors. Okay, so we get also errors regarding taxes. You have, for example, improper treatment of tax liability for the deferred tax liability or deferred tax asset, etc. You will have also some improper accounting for these other comprehensive income items, for evaluation of plant assets, for unrealized gains or losses, etc. Okay, you have also issues regarding the inventory costing valuation, the quantity, the sales adjustment, etc. Okay, so as I said, so this is just illustration for, let's say, the most common errors, and this illustration is saying for us that as I said, errors they are likely to be committed for any item, or on any item, any section, any account, of course, in the accounting records. Okay, so let's see now, as an accountant, of course, how to deal with these situations. Okay, so we have actually the general rules, and then we'll go back, of course, to see in particular, of course, for the specific situations. Okay, so in sum, all material errors must be corrected. Okay, in general, when we discover material errors, we have to correct for them. Okay, so how to correct? Okay, so the IFRS, of course, mandate, if we are able to say that these corrections will be recorded from prior period as an adjustment to the beginning balance of the retained earnings in current period. So if, for example, we are in 2022 and we discovered errors related to 21 or 20, whatever, we have to proceed with adjustment in the beginning balance of the retained earnings in the current period, meaning in the period where, of course, we discovered that errors. Okay, so this is what we call as prior period adjustment. Okay, and even if we are providing comparative financial statements, so we have to go back and restate the prior statements affected and correct for the error. So in summary, the accounting treatment for these errors is similar to this retrospective approach when we have to change an accounting policy. Of course, the difference is that we are not changing from one policy to another, but we are correcting for an error. So we have to show or let's say adjust the beginning balance of the retained earnings in the current period. That's of course because of the prior periods, of course, effect. And next, of course, if we are providing comparative statements, we have to restate also the prior statements affected and correct for these errors. Okay, so that's the general treatment. Okay, as I said, again, I'm stressing the fact that you will see in details. It's not really straightforward. Okay, because in particular, the accounting treatment for this correction of errors must be following, of course, the issue that the type of error first, if it is counterbalancing error and non-counterbalancing error, so we'll see that together, and also whether or not the accounting books were closed or not. Okay, so that's also two conditions, of course, that will, let's say, impact how we deal with the correction of errors. Okay, so let's just first try it with the simple here situation and see this illustration. So in 2020, we got the bookkeeper for the Selectro Selectro PLC discovered an error. So it was discovered in 2020. The error, it is about in 2019 that the company failed to record 20,000 of depreciation expense on a newly constructed building. This building is the only depreciable asset Selectro owns. The company correctly included depreciation expense in its tax return and correctly reported its income taxes payable. So here, just to avoid you this additional treatment regarding deferred tax liability and all this stuff, okay, or deferred tax asset, okay, in this situation. So on tax purposes, everything was okay. But of course, from accounting perspective here, the firm already failed to record this 20,000 of depreciation expense. So we are in 2020. And what we did is that we discovered that error that is related, of course, to the 2019 accounting records. Okay. So let's see the situation here. The income statement for the year ended in December 31 with the error and without the error. Okay, so if it was with the error, assuming that we have this income before depreciation expense, it was 100, so the firm didn't record any depreciation expense, so the income before tax is still 100,000. If you assume we have 40,000 here or 40% as income taxes, so we got 60,000 as net income. Okay, but if you assume that the mistake wasn't really committed here, okay, so we have a depreciation expense of 20,000, so the income before taxes, it is 80, and then we have, of course, of 30 so 40%, of course, of the 80, we have a 32,000 of current income taxes payable. So the net income is 48. So you see here the difference is that we got 12,000, of course, as higher here net income. Because why? Because we omitted to accrue for depreciation expense. Okay, so what will be the journal entry that Selectro should make and did make for recording depreciation expense and income taxes? Okay, so the thing here is that, as I said, so there was no depreciation expense recorded in 2019. Okay, and we discovered that error in 2020. Okay, so let's just compare what were the journal entries made. Okay, so in 2019, when we have, of course, the error, there is no depreciation made. Okay, and of course the firm already what debited income tax expense of 40. They have deferred tax liability of 8,000 and income tax payable of 32. معلش the deferred tax liability, because remember that's of course the situation or these differences that is found between the tax report and of course the financial reports. علاش على خاطر قلنا for tax purposes the appropriate amount were taken into consideration, the depreciation expense. Okay, donc هنا we have of course the deferred tax liability. علاش على خاطر for financial reporting purposes there was an error regarding the accruance of depreciation expense. So if there is no mistake was done, we would have what? Debited depreciation expense, credited accumulated depreciation for building, and then debited income taxes expense and credited income taxes payable. So there is no deferred tax liability account to be credited, or of course we have additional of course depreciation expense and accumulated depreciation for building. So what do you think? How can we correct for that situation? So we'll see together. So before that, what will be the effect of that error on depreciation expense in 2019? So in 2019, depreciation expense was what? Was understated by 20,000 because there was no journal entry for depreciation expense, etc. Kif for the income taxes in 2019, it was what? It was overstated. Okay, it was overstated by 8,000. علاش على خاطر we failed to accrue for depreciation expense. Okay, so the net of course effect is that my net income was what? Overstated by 12,000 in 2019. Okay, so علاش net of course خاطر first of all when I understand my depreciation expense of 20, so net income will be overstated by 20, and then if I overstated another expense by 8,000, then net income will be understated. So the net effect is that my net income is overstated by 12,000. Okay, so that's of course the effect of that 20,000 omission in 2019. Okay, what's about the statement of financial position? We have accumulated depreciation for building that is also understated. Okay, and we have a deferred tax liability that is overstated here. Okay, so of course the correction of error will try to what? To correct for that situations. Okay, to correct for this overstatement of net income and also the understatement and overstatement of deferred tax liabilities. Okay, so the correcting entry will what? Of course احنا 2019 it already a prior period. Okay, and you know that for depreciation expense it is a temporary account, so we cannot really debit depreciation expense for the current period, of course, for what is related to the prior period. So we will have then to show or offset that understatement of depreciation expense and of course the overstatement of net income. So it will be offset by the debiting or debiting of course the net amount to the retained earnings. Okay, donc remember كان نرجع لهنا قلنا net income was overstated by 12,000. So to correct for that situation, we have to debit retained earnings by 12,000. At the same time, we have to correct for the overstatement of deferred tax liability. So it will be debited. And then we have also to credit for the accumulated depreciation here for building. You see here? So that's a correction that we are making for this kind of course of error. Okay, so if you have an error with this depreciation expense, so please be careful regarding of course its effect on net income. So of course you will have to consider the net effect because it's known that depreciation expense in particular will have of course effect on your income tax expense. Okay, of course if you have higher pre-tax income, then you will have to pay more or to recognize more income tax expense. Okay, for that reason I will be paying less if there was no error in my tax report, and that will of course will have an effect as I have a deferred tax liability, because you know for depreciation, if you have depreciation expense in the current period, you will have to pay less in the current period, but in future period you will have to pay more taxes, and that's of course the objective of having this deferred tax liability that was here credited because of that mistake. Okay, so to correct for that situation, I have to reverse the overstatement of the net income by 12,000, so I will have to debit that to the retained earnings. I have also to reverse the overstatement deferred tax liability by debiting that account. And lastly, I will have to correct for this accumulated depreciation building that wasn't debited, credited will be credited. So you see here, that's of course how we correct for that error. So we have to show the correction, of course, on the respective here or related account. Okay, is that clear?
Madam Mariam قالت لك I still don't understand the deferred tax liability.
Okay. So why talk احنا when we have معلش خاطر هذا unfortunately ما قلنا we didn't cover the income tax the accounting for income taxes, but I'm trying to just summarize that quickly. So for businesses in general all businesses all over the world نحكي bien sûr على listed على they are of course having their of course financial reports with this of course objective of what providing useful information to investors and so on اللي حكينا عليه الكادر conceptual متاع financial reporting. Okay, so as businesses I will have to prepare financial reports to serve the information needs of investors. So we have our rules اللي هما based on IFRSs. At the same time, I have to fill for tax, of course, reports for taxing purposes, etc. And the tax reports will have, as I said, let's say specific processes regarding some, of course, كما نعرفش قريتهم هذول اللي في السكند توا سيمستر ولا ايفن اللي تعملوهم justement par rapport في التاكسيشن اللي تعملوا الياس واليار اكسترا كيفاش تعمل justement مثلا فما حاجات depreciation that are allowed for example to specific threshold, or for example some expenses that you are not allowed to deduct from income, pre-tax income, for example. So we got this situation, always that situation. Sometimes you will have, for example, the kind of expenses that you are allowed, of course, to reduce it from the pre-tax income. Others you are not allowed, so you have to reintegrate it. So, for example, عنا for financial reporting purposes, revenues, they are recognized, of course, based on the accrued accounting. So even revenues on account, they are what? Part of my sales revenues in my income statement. Net income there is taken into consideration these accrued revenues. But for tax purposes, I will what? I will report only for cash revenues, okay? Donc, هذه, of course, I will have what we call a difference regarding pre-tax income that is measured based on IFRS and based on tax rules, okay? So the differences can be temporary وإلا حتى permanent. So the example of revenues, it's kind of temporary differences. على خاطر cash that wasn't collected in the current period will be collected in the future period, okay? Donc هل differences between pre-tax financial reports that is measured based on financial rules, accounting standards, and the pre-tax financial income that is measured based on tax rules, as I said, will make the firm incur what we call any deferred tax liability or any deferred tax asset. ايش معناتها deferred tax liability ولا ايش معناتها deferred tax asset? So simply put, when you have a pre-tax income that is measured based on accounting standards, it is higher than your pre-tax income based on tax rules, and this is kind of temporary differences. Donc انت in financial report purposes, you will have to pay more income tax payable, okay, or income tax expense will be higher for you compared to what you will have reported in your tax report, okay? Donc, the difference between your income tax expense and income tax payable, خاطر نعرف income tax payable, it will be measured based on your tax report. Well, income tax expense, it is measured based on your financial reports on IFRS, on accounting standards, okay? Donc, please, هذه هي income tax payable. It is measured, كنرجع لهنا حتى في example. The income tax payable here, it was measured. شفتوها هنا 32. it is measured based on of course correct يعني situation in particular for tax report purposes. قلنا for tax report كان ترجعوا الexample هنا ايش قال لنا the company correctly included the depreciation expense in its tax return and correctly reported its income tax payable. You see here, so the income tax payable here is correct. يعني علاش؟ على خاطر هذه pre-tax income, it is correct, it is taken into consideration the depreciation expense. Donc the pre-tax, the income tax payable, it's always measured based on income before taxes from the tax report. The income tax expense هنا for the for financial reporting purposes, it is always measured, of course, on financial based on IFRS rules. peut-être دخلتكم بعضكم, please, just to sum up and summarize the idea. احنا for paying taxes as businesses, when we have that transaction, I have to debit tax income tax expense. I will have to debit income tax expense and the credit income tax payable. Okay, donc simply put, these two amounts, they are likely to be different. علاش different? Because, as I said, the way that we measure income tax expense based on IFRS is not the same as of all the rules. They won't apply to measuring the income tax payable. على خاطر income tax payable, that's the amount that we measure from tax reports. Income tax expenses, that's the amount that we measure based on IFRS. So this kind of differences, it can be temporary or permanent. But if we have, of course, in this situation, there is differences. So sometimes we have a deferred tax liability or deferred tax asset. Donc ايش معناتها deferred tax liability؟ هنا خاطر it was a situation of not recognizing a depreciation, an expense. Okay, donc أنا for IFRS هذه based on IFRS and standards, I made errors for not recognizing my depreciation expense. So I provided a higher income before income taxes. Okay, donc هنا I'm here. I have a higher income tax expense while I'm just paying now 32. Okay, donc what I have to pay in the short term to the tax authorities only 32, while I recognize the income tax expense of 40. So this difference is the kind of liability toward the tax authorities. I will have to pay the next period. I don't know when we have, for example, to correct for this situation. ولا حتى if I didn't discover that error, اليوم ما حطيتش that error, I will continue with this deferred tax liability until I discover that mistake, and of course I will have to settle that deferred tax liability, of course, for tax authorities. Okay, donc please ما تدخلوش بعضكم برشا خاطر أنا عارفة I didn't cover. قلت I will do my best to have a recording for that session, but simply just keep in mind that we have two accounts that we use to recognize the payment of taxes. We have an expense account and we have a liability account. Simply put, this expense account is always measured based on financial reporting that are prepared based on IFRS. Income tax payable, that's what we measure based on tax reports. علاش؟ على خاطر what we pay is that should be, of course, in line with the tax rules. What we have to pay. خاطر قلنا فما حاجات, for example, فما some expenses, they are not allowed, of course, to be reduced or subtracted from pre-tax income. فما كما قلنا مثلا accrued revenues, they are not part of my pre-tax income. علاش؟ على خاطر they are not yet cash. Okay, donc فما differences. Donc had differences, it can be in the form of a liability toward tax authorities or an asset, so I will have a reduction of future payment of my taxes. Okay, is that clear, Mariam?
مدام قتلك مريم ياس، يعني مدام واخي أنا نحب نسأل سؤال. يعني كان ما خلصهاش هو التاكس هذيك جست قيدها اللي هي income tax expense. basically يعني الانكم تاكس اكسبنس هي عبارة نستعملوا فيها الميثود كونتابل، والانكم تاكس بيبل نستعملوا فيها الميثود نتاع الفيسكاليتي هكاكا.
Tout à fait. يعني احنا هذوما this amount they are measured. How we measure that? قلت income taxes payable, this liability that we recognize toward tax authorities is always measured based on tax reports.
اوكي
based on the adjustment that we made to the pre-tax income. خاطر احنا في الشابيتر الاخر ما شفناش نشوف اللي بعد نخرجوا من income before income taxes that was prepared based on accounting standards, and we make some adjustment regarding, for example, increasing again, for example, with the kind of expenses that were not allowed to be subtracted, or reduced with the amount of, for example, non-cash revenues. Okay, donc to get let's say the basis for estimating the income tax payable. على ذلك قلت income tax payable, my liability, the short-term liability toward tax authorities will be measured based on tax rules. Okay, donc هذا measured based on tax rules, هذا measured based on IFRS's rules. Okay, donc فما it's often that we'll end up with these differences. قلت differences can be temporary or it can be also donc هنا par exemple عندنا error, mais sometimes راهو ما فماش errors, depreciation expense was recorded, but businesses, for example, what they record depreciation expense for using, of course, based on for financial reporting purposes and for investors, etc., using the straight line method. With you for tax reports purposes, they use the declining balance, for example, method. Okay, donc and depreciation expense will be different amounts. Donc هنا for the straight line I will have a higher income expense. At the same time, for what I have an income taxes payable will be lower. علاش؟ على خاطر I have higher depreciation expense because of this double declining balance or declining balance in general, the accelerated method I mean. Okay, donc NSNA I will pay less taxes because of this method, but you know that for this declining balance or the accelerated method, if in the first 2 years you will have higher depreciation expenses, but in the following years you will have the opposite, of course, effect. على ذلك I will recognize what you call deferred tax liability. So I have a liability toward, of course, tax authorities regarding the fact that I'm paying now less taxes than what I should be because of using different depreciation method. Okay?
اوكي مدام. وسؤال
You're
اخر،
welcome.
يعني كان هي اكتشف لي الاير بعد ما خلص سي بون التاكس هيك، يعني هو خلص مثال نقولوا 40,000، يعني تولي دفر التاكس لايبيليتي عبارة TVA كريدي دو TVA، يعني ليتا دوا رومبورسي المونطون هذاك على
لا ما تدخلوش بعضها عايش. دونك ديجا سي با دو تي في ا، هنا نحكيو على الانكم تاكسز. اوكي دونك لامبو سور لي سوسيتي يعني. اوكي سي با دو تي في ا اكسيتيرا. واحنا كي نحكيو على الانكم تاكسز payable، احنا وقت اللي باش يصير البيمون we'll have to debit income tax payable and we credit cash, but still I have a deferred tax liability that is related to the prior period. هل period الثانية the next period I will have to adjust situation كان بدلت ولا صلحت for errors ولا etc. deferred tax liability can increase or decrease if it was of course consumed in the current period. Donc كان أنا par exemple I am in the second year already have already take advantage of course of the 2, for example, years where with the accelerated method will show lower pre-tax income than lower income tax payable. The reversal which you see for the following period is that I will have to debit deferred tax liabilities, and of course income tax expense usually lower, deferred tax liability will be debited, and income tax payable will be higher. يعني as if باش تولي عندك الوضعية هذه income tax expense will be 32, deferred tax liability will be debited by 8,000, and 40 will be your income tax payable. Okay, donc هذيك a situation when we have to adjust for these deferred tax liabilities. ولا كما قلت فما زاد situation when you have a deferred tax asset. ايش معناتها deferred tax asset؟ يعني انت now you are paying more taxes than what you should have to pay. Okay, donc انت you have this higher income tax expense then compared of course to what you have of course to pay, that will create you an asset. يعني an asset that in the future you will have to pay less taxes. donc هل حكيت comment dire l'ajustement اللي باش تصير مع tax authorities etc. donc c'est autre chose. Mais أنا نحكي هنا from an accounting perspective, how to account for this kind of differences regarding your income tax expense in this situation that is measured based on IFRSs, وبيان سور هنا نحكيو خاطر عنا error, والincome tax payable that was measured based on your tax reports and tax rules. Okay, donc please what you have to keep in mind. ما ندخلوش برشا في الديتاي خاطر ما قريناش شابيتر دونك باش نضيعوا فيها الحكايه. دونك انا علاش حتى عملت شويه الاكسترابولاسيون مع تاكسيشن الكور، سي جوست باش نرجع لكم لحكايه اللي تعملوه التريتمنت اللي تعملوه الانكم ستيتمنت وقت اللي باش تحسبوا دونك pre-tax of course income before يعني income taxes بالréajustement ترجعوا تعملوا l'intégration de some types of expenses تعاودوا par exemple تنحيوا I don't know revenues that are not for example won't be part of this pre-tax income etc. okay so باش توصل en quelque sorte ماشي بون سيتا اون فرونسي الحق انا تاكسيشن
للاي اس
عندي
دي
شويه وقت
ولا للاي اس دي.
فوالا voilà, tout à fait. Donc, c'est juste pour faire un peu l'assimilation. Mais avec, en fin de compte, اللي تقريتوها في taxation, voilà, وراكم كيفاش تحسبوا income tax payable, okay? Donc, احنا, that's of course the rule, is that for accounting, income tax expense, again, donc that's the last time I will say it, of course, it is measured based on accounting standards. Income tax payable لو كان هنا قريته هنا without error there is no problem with the deferred tax liability. علاش؟ على خاطر I already recognized this 20,000 so I have my 80,000 as income before taxes. Donc the income tax expense is the same as the income tax payable. donc احنا البروبلم هنا was shown علاش؟ على خاطر عندي this issue of I am recognizing a higher tax expense while I will be paying less now. Donc, of course, this will open the door to the future payment of taxes, okay? So this is what is meant by deferred tax liabilities. Okay, so this is what we just did. Donc, again, what is important for us is that for the correcting entry, I have donc هذه deferred tax liability, there is no need for that. If there is no mistake, there is no deferred tax liability. Donc I will have to take it off, okay? So I have to dip that. I have also an income tax expense, of course, that is because it was higher by 12 or 8,000. We have also the effect on the net income of 12,000. قلنا net income was overstated, so that's why we'll have to correct for that by debiting the retained earnings by 12,000. So هنا صلحنا for the overstatement of net income. باش نصلحوا also for the understatement of the accumulated depreciation. Donc we will have also to credit the accumulated depreciation for building. Okay, so هنا the correction of errors as again, so it is, if you may just notice, we have of course the expense or revenue account that were reported to the prior period will be, the adjustment will be made to the retained earnings account, and of course the other permanent account هنا will have of course to correct using of course the appropriate accounts. Donc هنا deferred tax liability will be debited, accumulated depreciation will be credited. Okay, so this is of course still just showing, as I said, straightforward examples. مازلنا ما دخلناش more in details regarding more complicated situations. Okay, donc هنا of course we'll see also how of course to show this correction in the retained earnings statement. Okay, donc نحكيو هنا على single period statement, so we are not providing comparative statements. Okay, donc هنا select the retained earnings statement December 31 2020. Okay, so it has beginning balance of 350. We have a net income of 400,000. Okay, donc retained earnings as reported 350. We have of course to apply for the correction of error. You remember we would have of course reduced it by 20 for depreciation expense, but at the same time we had deferred we have overstated, and then we are understating our depreciation expense, we overstated our income tax expense. So the net effect that we were overstating my net income, and then of course my retained earnings. That's why we'll have to reduce the beginning here balance of the retained earnings to have the retained earnings as adjusted on January 1st. Donc, and then of course we had to add our net income. So we have already our retained earnings of December 31, 2020. Okay, so this is of course how to provide retained earnings after discovering of course and correction of that error. Remember, it was an error that was made in 2019 and corrected in 2020. Okay, the correction of course will follow here with this retained earnings statement. And كما قلنا هنا, we are providing just a single period financial statements. Okay, Bahi, what if we are providing comparative statements? So meaning we have 2 or 1 year, 2 year, 3 years, etc. Presented in the financial statements. So the company should what? Make adjustment to correct the amount for all the affected accounts reported in the statement for all periods reported. So we go back to the all period reported and we go adjust. For example, كان جينا نعملوا في income statement وعاملين 2019 2020, we'll have to what? Include depreciation expense in the report, etc. And then restate the data to the correct basis for each year presented. And show any catch-up adjustment as a prior period adjustment to retained earnings for the earliest period it is reported. Now, again, this kind of treatment, that's similar to the retrospective approach, okay? But of course, let's say the terminology or the words that we are using, it's more about correction, restating, not of course, or recasting, not just adjustment like we did for the retrospective approach, okay? So here we got another example of firm. So we got its statement of retained earnings for the year ended December 31. We have a balance of 1,050,000. We have a net income of 360. We have dividends, and then we have the balance of 1,110 at December 31, 2018. So before issuing the report for the year ended December 31, 2018, you discover 62,500 euro that caused the 2017 inventory to be overstated. So of course, when you overstate your ending inventory, meaning what? You understated the cost of goods sold. And if you understate the cost of goods sold, your net income will be also overstated, okay? So the situation that in 2018, I discovered 62,500 euro that caused what? The inventory to be overstated, and of course, consequently, cost of goods sold understated, and also net income overstated, okay? So what will this discovery have any impact on the reporting of the statement of retained earnings for 2018? And here we are assuming 20% of tax rate, okay? So again, we'll have to what? To show, of course, the beginning balance as it is provided in it, 1,050. And then, of course, we have to correct for prior period adjustment. How we measure that, of course, 50,000, because it was net of taxes. Donc, if my net income was overstated by 62,500, don't forget that we have 20% of income taxes, of course, and that is of course deferred taxes in it. Donc باش نعملوها it will be of course 50,000 net of taxes. Okay, so that's the effect of of course on net income. Okay, that's the net effect or net overstatement of net income of 2017. Okay, donc in 2018, so in the beginning balance of course of retained earnings, we have to correct it for it, so we have to reduce it by 50,000. So that's the restated here amount, and then we have to add our net income, and then we have reduced dividend, and then we have of course our balance of 1 million or 1,060,000, 1,060,000. Okay, now and just as I said, the illustration on how to reflect of course this correction of errors in the retained earnings statements. Okay, so let's just here see together the summary of the accounting changes and correction of errors, and then we still have the following learning objective that we will see in details how to correct for errors, and as I said, in particular when we have counterbalancing error, non-counterbalancing errors, when we close the books or when not, etc. Okay, so please remember, when we have any change in accounting policy, you have to use the retrospective approach. So what do you mean by retrospective approach? We have to change the financial statement of all periods presented. And of course, in the year of the change, of course, we have to provide the effect on the net income and earnings per share for all prior period presented, okay? Of course, don't forget to make the adjustment to the beginning retained earnings balance in the statement of retained balance, of course, in the earliest year presented. And of course, when it is about impracticable, so we don't have to make any changes maybe in the prior year, so we will just need to use the prospective approach, okay? And of course, as we said, you have to provide additional disclosures about the changes occurring on current years, why you couldn't, for example, provide these cumulative effects and amounts for prior period, etc. Okay. Next, of course, the changes, it's about the change in accounting estimates, okay? So here we are talking only about the prospective approach. So you will apply the changes in the current period, so we don't go back and change any financial statements, of course, any old ones. So we have just to report the current and the future effects on this financial statement, of course, based on this new estimates. So keep the prior period as they were previously reported, nothing. And also you don't make any adjustment to the current period opening balance, of course, in the retained earnings to show the cumulative effect of that new, for example, methods in prior periods. Okay, so that's the prospective approach. And please, one remark, of course, that I just remembered. So sometimes you may find a way situation that you are not, for example, able to decide that if it is a change in accounting estimates or change in accounting policy. Well, in that kind of situations, you will have to opt for and treat it as change in accounting estimates. I don't know, just an example. احنا في تونس, for example, one of the accounting methods that are or the change in, for example, the change in depreciation methods. Donc احنا please remember حكينا على change in the useful life, حكينا على change in residual value, etc. This is the kind of change in estimates. But what if the firm decide to change from, I don't know, the straight line method to the units of activity method, or to the this digit years method, or any other depreciation method? Excuse me. So how can you qualify this change? Is it a change in accounting policy or change in accounting estimates? What do you think? No clue? Well, قولوا لي.
A change in accounting estimate.
Yes, actually, IFRS is, of course, stipulate that this kind of course of changes must be recognized as change in accounting estimates. علاش؟ على خاطر we are considering choosing, or the depreciation method is based on what? Estimate about how you are allocating the cost of using the asset over its service life, okay? Donc, if you are, I don't know, changing in the accounting and depreciation method, of course, you have this kind of change in estimating, of course, how you will be consuming the economic resources, of course, over the service life of that asset, okay? So that's why it is always, or of course for IFRS, they are leaning toward, of course, recognizing this as change in estimate. In Tunisia, for example, the practice is that they are considering change in accounting depreciation method, of course, as change in accounting policy. Okay, so this is, of course, inconsistent with the IFRSs and how it should be treated. Okay, so احنا for us, of course, you have to keep in mind that sometimes you may find some situation you are in blurry situations. If you are not able to say if it is a change in accounting method, you will have, or it is not clear change in accounting policy, or change in accounting estimate, then you have to consider it as change in accounting estimates, okay? Let's just follow with this summary when we have any change to errors, because here we have to recast and restate because of discovered errors. So here it said that we are employing the restatement approach by what? We'll have to go back and correct all prior period statement presented. Again, restate the beginning balance of the retained earnings for the first period presented when the error affects the effect will occur, of course, in a period prior to the first period presented, okay? So when you have, of course, an error that was related to the prior period, prior, of course, to what we are presenting here in our retained earnings statement, of course, we have to restate the beginning balance by showing, of course, decreasing or increasing with the effect of that error that is related to the prior periods, but discovered, of course, in the current period, okay? Here we go, as I said, with this in-depth analysis of the effect of errors. And we'll see together how we properly account for this kind of situations, okay? So please, to be able to know how to deal, how to proceed with these errors discovered, what kind of accounting treatment, what kind of account that will be used, etc., to correct for that situation. First of all, we have to answer these three questions. First of all, what type of error is involved? So هنا نحكيو على counterbalancing or non-counterbalancing error. We'll see what does it mean. Next, if of course it is counterbalancing or a non-counterbalancing, so what will be the entries needed to correct for that error? And also after discovery of the error, how our financial statement to be restated, okay? So again, we have to use, as I said, the restatement or retrospective approach. So companies will treat this error as a prior period adjustment and report them in the current year as adjustment to the beginning balance of the retained earnings. The similar way as we did for the change in accounting policy, okay? باهي. So قلنا what type of errors. So of course counterbalancing or non-counterbalancing, that's what we qualify as let's say errors that are impacting both statement of financial position and income statement. But هنا just we have to provide more details about, of course, the error styles, okay? Donc, in general, قلنا errors can, of course, impact any items in accounting records. So we can end up with what? With errors that are impacting the statement of financial positions, okay? So هناك نحكيو errors that are only impacting the balance sheet. So it's what kind of errors? So it can be likely what? Presentation of asset, liability, or equity account, okay? Donc, it's more about reclassification issues, okay? Donc, if it is, of course, a current year error, so we have just to reclassify the item to its proper position. If we, for example, I don't know, we bought a land and it was, for example, a long-term investment, and of course, instead of recording it as long-term investment, I recorded it in the land, of course, under the property, plant, and equipment section. So if I discover that error in the current year, of course, I will have to reclassify it to its proper position. If it was a prior year's error, and of course discovered in the current period, we have to restate the financial statement position, the statement of financial position of the prior year for comparative purposes. Donc, if I'm presenting financial statement and statement of financial position, of course, in particular, comparative, of course, statements, I have to show a correct comparative statements, okay? Donc that's so there is no really problem with the statement of financial position errors, okay? Kif when we have only income statement related errors, okay? So it's also a bit about improper classification of revenues or expenses. Sorry again. So, like we just learned about the balance sheet year treatment. If it is current year error and it was discovered, of course, currently, I will have just to reclassify the item to its proper position. For example, interest expense, حطيتها, I don't know, in the operating expense, for example, okay, in selling administrative expense. I will have just to reclassify it, okay? And of course, if I am providing prior year's error, of course, I will have I'm providing, I mean, comparative financial income statement, of course, I will have to restate the income statement of the prior year for comparative purposes. Now, please, restating meaning providing the income statement in the correct version, okay, in the correct version, in the correct classes, and of course, as if the error wasn't, of course, already committed or done, okay? Again, so if we have this kind of classification within the balance sheet or the income statement, it's not really a big deal, okay? So the problem here is that when you have errors that are impacting both the balance sheet and the income statement, okay? And then here we'll be talking about what we called a counterbalancing error or non-counterbalancing errors, okay? So simply put, what is a counterbalancing error? Is that this is the kind of error that will be offset or correcting itself, of course, over 2 periods. Yani انت, when you have, for example, you did that error, that mistake in 1 period, the next period it will be, of course, overset, etc., or offsetted, and then of course reversed, I mean, and then of course the error will be corrected over 2 period, okay? So this, of course, we'll discover that, of course, what kind of counterbalancing errors, okay? We'll see together. So if we are in that situation, we have an error that will be counterbalanced in the next period, and then, of course, it will be corrected over 2 period. So if company has closed the books, so here also another condition. So for counterbalancing errors, if already books they were closed, so in the current, of course, here in the year where we discovered, okay, the error, okay? So if we are, for example, in the second year, meaning that the error is already counterbalanced, so there is no entry necessary, okay? Donc احنا we closed our books, we are in the second year, so the error is already counterbalanced. So for example, the error, for example, effect in the first year was, for example, to overstate net income by 10,000. Next year, it is understating net income by 10,000. Donc at aggregated level, this error is already offset or corrected over 2 periods. يعني the aggregated, of course, effect is null, okay? Donc احنا, if we are in the second year, for example, and the error is already counterbalanced, donc we closed, of course, our books in the current period, so there is no entry necessary, okay? So if still the error is not yet counterbalanced, and even if we already closed the books, but we have to make entry to adjust the present balance of the retained earnings, okay? And for comparative purposes, we have to go back and restate, of course, the financial statement, of course, even though, for example, the correcting journal is not required, like when we have already counterbalanced and we already closed the books, okay? So if we didn't close the book yet, okay? So if the error already counterbalanced, we have still to make a correction of that error in the current period and also adjust the beginning balance of the retained earnings, okay? Okay, now we're just telling, of course, the general rules, and we'll see with the examples, okay? I'm sorry. So please try to focus. So we are still talking about the counterbalancing errors. So قلنا we have 2 situations. The first situation is that the firm already closed the books and we are in the second year, meaning the error is already counterbalanced. So there is no adjusting entry is needed here. When we didn't close the books, even if it is counterbalanced, of course, we have to still make a correction by making, of course, adjustment to the beginning balance of the retained earnings, and also use, of course, any account, of course, to correct for the current period, okay? So if there is this error is not yet counterbalanced, of course, we'll still have to make adjustment, of course, to the beginning balance of the retained earnings. So this is about the counterbalancing errors. So again, the errors that will be correcting itself over 2 periods. Okay. Now the opposite, of course, situation, you can end up with non-counterbalancing errors. For example, what is the non-counterbalancing errors? So احنا نحكي على counterbalancing errors, the errors that you, for example, do with respect to valuation, of course, of inventories. You know, when you overstate inventories in the current period, you will be understating your cost of goods sold in the current period, and then this will be, for example, the cost of goods sold. The ending inventory will be again قلنا overstated. Donc in the current, in the following period, it will be also overstated, and the cost of goods sold will be overstated, so it will be counterbalanced. Okay. The non-counterbalancing example is that when you have instead, for example, of recognizing this purchase as asset, and of course doing depreciation over the useful life, you totally expensed the amount in one period. Okay. And of course, when you expense it, of course, you have over the useful life of the asset, you didn't really debit any depreciation expense, etc. Okay. So this is the kind of non-counterbalancing errors. Okay. So it won't be offset in the next accounting period. You will continue not recognizing any depreciation expense as long as you didn't discover that error. Okay. So in that situation, companies will make correcting entries even they have already closed the books. Okay. Even if of course, in the period in which, of course, I discovered, and even if I closed the books for that period, I have to go back, make some correcting entries. So here we have to make journal entries to correct for that situation when we have these non-counterbalancing errors. Okay. So we'll see an example here with counterbalancing, non-counterbalancing errors, etc. Okay. So we got here a partial trial balance. We have supplies. So debit of 2,500, salaries and wages payable, credit 1,500, interest receivable 5,100, prepaid insurance 90,000, and earned rent 0, interest payable 15. So assuming that the books have not been closed, okay, what are the adjusting entry necessary at December 31? Okay, but of course, with respect to what? With respect to first situation, we have a physical count of supplies on hand. December 31 totaled 1,100. So the situation is that you didn't close the book yet, and of course you have you didn't adjust for supplies expense. You are still what showing your supplies with this balance of 2,500, while you have only on hand 1,100. Okay, so here we just need to make the adjusting entry as we already learned. Okay, by debiting the supplies expense and crediting supplies, of course, with the difference. So this is how to correct for that situation. So simply make the journal entry. Donc هنا we are in the same year. We didn't close the books. So that's, of course, 2019. You see here, December 19, that's a partial trial balance, so not yet adjusted trial balance. So we had already, we didn't close the books, as you said. We are aware of that situation, so we need to just make the appropriate journal entries, debiting supplies expense and crediting supplies on hand. Next situation, when we have accrued salaries and wages on December that are amounting to 4,400. Kif هنا, we didn't close the book. So what we do is that we will debit the appropriate account. So salaries and wages expense will have to debit it, and credit salaries and wages payable, or accrued. That's the same, to say that we have salaries and wages payable of 2,900. Okay. So هنا we are proceeding of adjusting entries. علاش على خاطر it was an error that is related to the current period. We discovered in the current period, and of course we didn't close the book yet. Okay. We got also accrued interest on investment amount to 4,300 on December. So kif we have accrued interest revenues. Okay. Okay, now we'll debit interest receivable, and we credit interest. Okay. Yes, نرجع لهنا خاطر just we have to compare with the partial balance. Okay. Donc هنا interest receivable, it was 5,100 shown, while it is said that we have 4,300. So here we got an overstatement of our interest receivable. Donc على ذلك we have to just need to go back and make a reversal entry with the difference amount. This is what we did. Interest revenue debited and interest receivable credited with 750. So to bring the balance from 5,100 to 4,350. Okay. The unexpired portions of the insurance policy total 65,000 as of December. So that's the prepaid insurance still 65. احنا قديش عنا? It was here 90,000. So we have to make the adjusting entries by debiting insurance expense and crediting, of course, prepaid insurance. Okay, so with the amount of 25, I guess I can, yes, insurance expense 25. Prepaid insurance 25,000. So this is, and then please, we didn't really learn something new because, as I said, we are in the same period, the error was discovered in the same period and books were not closed. Okay, donc nothing apart, of course, proceeding with the classic adjusting entries that we already know from the freshman level. Okay. Still dealing, of course, with the 2019, of course, here adjustment for the errors. So 24,000 was received on January 1st for the rent of a building for both 2019 and 2020. The entire amount was credited to rental income. Donc احنا هنا please يعني the appropriate way to deal with this receipt of 24, it was what? Normalement, we'll have to debit cash 24 and we credit and earn it rent revenue for 24,000 and they are on January 1st. But what it said is that it was entire amount was credited to rental income, to rental revenues. Okay, donc now we have actually to what? To adjust for that or to correct for that situation by recognizing only the portion of rental income that is related to 2019. So here, of course, we will have to just recognize 12,000 as rental income or as rental revenue. So we simply debit rental income or rental revenue by 12 and credit and earned revenue or earned rent revenue by 12,000. Okay, so this is just a correction of that situation. علاش only 12,000 على خاطر don't forget that we are on December 31, 2019. We have already an expiration of 1 year, so we have already earned rent revenue of 12,000. Donc اللي باش نحيوها من rental income is only 12,000. That will be recorded as an earned rent in the current period because it relates to the 2020, of course, period. When, of course, with the passage of time, it will be earned as revenue. So that's for the next period, not in the current one. And then we have a depreciation for the year that was originally here recorded as 5,000 rather than the correct figure of 50,000. Donc, هنا عندنا a mistake, mathematical mistake here. We discovered that. So we have not just to what? To make the journal entry and increase, of course, the amount by 45. So the depreciation expense 45 and the credit accumulated depreciation. So please, you see here, this is a situation when, as I said, the error was done in the same period when, of course, it is discovered and books, they were not closed. So there is no problem. You just need to proceed with the appropriate adjusting entries or appropriate, of course, correction of that situation like we did here for rental or for this amount. Okay? Here. Now we'll see where if we already closed the books. So we already you know what is closing the books. So you know, in the accounting cycle we proceed with closing revenues to income summary, closing expenses to the income summary, then income summary close to retained earnings, then close dividend to retained earnings, and so on. Okay, so we already did with all of this. So temporary account will be showing 0 balances, and of course permanent account will have these up-to-date balances, and in particular for the retained earnings account. Okay, now if we are in that situation, can you guess what will be the accounting treatment? I don't know, you are following or you are maybe understanding some of what I'm saying.
Retained earnings, we use retained earnings.
Yes, good. This is Zakaria.
Arami, madam.
Arami. سامحني ما عقدتش الصوت. Good. So here, instead of debiting or crediting any expense or revenue account, we have just to use the retained earnings account, okay? Okay, and instead of supplies expense, you'll have to debit retained earnings, okay? Instead of salaries and wages expense, you'll have to debit retained earnings. Instead of debiting interest revenue, you have to debit retained earnings for that differences, etc. Key for the insurance expense, instead of debiting insurance expense, you'll debit retained earnings. Instead of course of debiting rental income, you'll have to debit retained earnings. And of course, instead of debiting depreciation expense, you have to debit retained earnings, okay? So you will have just to replace any debit or credit to an expense or revenues account with the retained earnings account. علاش؟ على خاطر books they were closed, so we have to show the adjustment in the retained earnings balance, okay? Is that clear, please?
Yes, ma'am.
Okay,
Yes.
but we leave. I just need to stress. I want to go back to the textbook to show you something about, of course, this counterbalancing, non-counterbalancing situation, etc. Please just be patient. I won't take more than 15 minutes, okay? Just in the textbook, we have really a detailed illustration about these situations. Unfortunately, in the slides, they were not presented. Just to go back there. 22. Yes, this one. وقتاش باش تقراو recitation session on
Thursday,
it will be online ولا face to face?
face to face.
That's good. Okay, the change counting method. I'm just looking for example about change but correction of error. Just 1 minute. It's okay. Okay, so change. Okay, voilà. Donc, the same example already did that. Just looking for. We have a comprehensive example about, of course, counterbalancing, non-counterbalancing, etc. Voilà. Okay. I'm just trying to select the most, let's say, relevant example, because we have really important non-counterbalancing errors. Okay, counterbalancing. Okay, that's one. Anyway, we'll just need to cover some of the some examples in the textbook, but you have to go through them because they are really interesting. Okay, illustration. So خاطر هنا عندنا illustration 22 to 28. You have usual situation for counterbalancing errors and how to correct for that. باش ناخذ just examples وبعد باش نتعدوا directement لل non counterbalancing errors. So as I said, we won't take long, so just patient. I will just share my screen. Right. So this is the situation of counterbalancing errors. Okay. Donc علاش نحكيو par exemple when we talk about accrued wages, علاش it is considered to be counterbalancing errors. على خاطر if you omit to accrue for the salaries and wages expense in the current period, the next period will have to pay for that. Okay. Donc into next period will have to debit salaries and wages expense and the credit salaries and wages pay or cash, etc. Okay, so you have to credit cash when you are paying. Donc انت ما عدتيه c'est vrai in the current period, but in the in the period of course in which it should be accrued, but the next period you will be mistakenly debiting salaries and wages expense and crediting cash. Donc first period it was understated the salaries and wages expense. Next period it was overstated. Donc the sum of the result of this both of course years is that the error will be counterbalanced. Okay, donc احنا if we are in that situation, example December, are you following please? I'm not sharing my screen, it's okay.
Yes ma'am, yes.
Okay, so
it's okay.
December 31, 2019, we have Hurley Enterprises that did not accrue wages in the amount of 1,000. Okay, so what will be the situation that we are, you see here, December 31. So here, 1 year after. And of course, we are assuming that the books were not closed. Okay, donc هنا نحكيو على already a counterbalanced error. But still the books they were not closed. So remember even if the error was counterbalanced, and because the books they were not closed, we have to adjust the retained earnings of course account. So what will be the amount of course هنا remember قلنا we have so the amount wasn't accrued 1,500. Okay, donc if we didn't recognize the salaries and wages expense in 2019, meaning we got what? We have overstated our net income. So my retained earnings was what? Overstated too. Okay? Donc, على ذلك, we have to correct for that situation in the current year, of course, December 31, by debiting the retained earnings with this amount of 1,500. So still, I have to, على خاطر en plus, كما قلنا, the prior period, it wasn't recognized. In the current period it was recognized, so as if the effect on the retained earnings was twice. Okay, now كما قلت هنا additional debit of 1,500 will be in salaries and wages expense in 2020. Okay, donc in the current period 2020 the salaries and wages expenses were overstated. Okay, donc على ذلك it must be of course credited. Okay, and because we didn't accrue for wages and salaries, of course, in 2019, we have our net income that was overstated. Donc retained earnings was overstated, so that we have to debit retained earnings to correct for that situation. Donc شفتوا هنا even though it is a counterbalancing error. ايش معناتها لو counterbalancing errors اللي هي تخلي one prior period it was of course incorrect, the current period it was incorrect, but in some the effect of this error is already offset. على خاطر أنا in the prior period as I said, I was overstating my net income. Then in the current period, if I didn't discover, of course, the error was, of course, that I will be understating my net income. Donc, in total, the effect is null, okay? Donc, this is what we call here as counterbalancing error. So even though we have this, so we are in situation in the second year, it is a counterbalancing error, but because we didn't close yet the books, we have to adjust to the retained earnings account. They are related to the prior period, and the current period we have to correct for the salaries and wages expense that was improperly debited because it is not really an expense that relates to the current period. Okay, donc this is a situation when we didn't close the book. If we close the book, there is nothing to be done, no entry, because the error is already counterbalanced. Okay. So this is the adjusting entries اللي حكينا عليها. Donc كيف هنا, please, for counterbalancing errors, if we discover that error in the next period, يعني we are in the second year, if we didn't close the book, we have to proceed with the correction of errors by adjusting the retained earnings, مرة debit ولا مرة credit, it depends on the situation, and of course using the appropriate account. Donc كيما هنا for that example, so the Hurley Enterprises, he purchased a 2-year insurance policy costing 1,000. It debited insurance expense and credited cash. Okay, هنا هي error is that we should have what? Debited prepaid insurance instead of insurance expense. The company made no adjusting entries at the end of 2019. يعني ما يزيش أنا at the beginning I used the inappropriate account. وكيف ما عملتش حتى adjusting, okay, at the end of the year, okay. Donc, if I discovered that error in 2020, so what was the situation? The situation is that, of course, I would have insurance expense that is not for the entire 1,000. It should be for only 500, okay? Donc, I have what? I understated my retained earnings of 2019. That's why it will be credited. At the same time, I have, of course, in 2020, I didn't recognize any insurance expense. So I have to recognize the insurance expense related to 2020 by debiting insurance expense, okay? Now, this is the situation when I didn't close the books. If the books were closed, nothing must be done. No journal entry will be done, okay? This is because, as I said, the error is counterbalanced. علاش؟ على خاطر the entire insurance expense was already recorded in the prior year, in 2019, the 1,000. In 2020, there is no insurance expense, but as a total, in sum, the effect on the net income of both years is null, okay? It was offset. Donc, we are done with this counterbalancing errors. Just show you the non-counterbalancing errors. Yes, and we have, for example, of course, I'm stressing because it is really more complex than non-counterbalancing errors, because we have to proceed with correcting entries, even though books were closed. And it's not really a matter of closing the books or not. So, of course, the treatment will be different based on books were closed or not. But for both situations, we have to proceed with journal entries, okay? Now, for example, we have a situation where we have a failure to record depreciation. So assuming on January 1st, 2019, Hurley Enterprises purchased the machine for 10,000 that had an estimated useful life of 5 years. The accountant incorrectly expensed this machine in 2019, but discovered the error in 2020. So you see here, January 1st, it was recorded entirely as an expense. But of course, if it wasn't considered as an asset, there was no depreciation expense recognized in 2019. This error was discovered in 2020, okay? So if we discovered that error in the next year, and of course the books were not closed in this situation. And of course, it is not a counterbalancing error. علاش؟ على خاطر if ما فقتش بها راهي ما صلحتش روحها خاطر if I didn't discover that situation, I would have continued with no depreciation expense over the useful life of that asset of 5 years, okay? Of course, I wouldn't recorded an asset, of course, of 10,000 in my books, okay? But when discovered, of course, I have to correct for that situation. So how to correct? Now, if you are assuming here the use of the straight line depreciation, so first of all, I have to go back to recognize an asset, okay, with this 10,000. I have also to recognize the depreciation expense
of 2000, so 10,000 over 5. And then of course I have to adjust to the retained earnings balance. علاش retained earnings was only 8,000. First of all, retained earnings with this mistake of expensing this purchase of 10,000 was first understated. بعديك, if I didn't recognize any depreciation, so it was understated by 2,000. So the net effect is that retained earnings was understated by 8,000. Okay, donc هنا I have to credit 8,000 to the retained earnings, and of course don't forget the accumulated depreciation of 20% here. So this is the accumulated depreciation. علاش it is twice the 2,000? Because this is the accumulated depreciation for 2 years, for 2019 and for 2020. So this is the situation when we didn't close the books. So شفتوا هنا please the effect of on the retained earnings. This is what I said. Huh? So it was overstated by of expenses in 2019, so it was really understated. Then عندنا improper of course depreciation of 2000, so هنا it was overstated, so the difference is that it is understated by 8,000. Okay, donc على ذاك we will credit the retained earnings. باهي, what if the books were closed in 2020? Donc again شفتوا هال depreciation expense it won't of course exist, it will be showing the effect on the retained earnings. Okay, donc هنا بتولي عنا we debit equipment for 10,000, retained earnings won't show the 8,000, but it will be only 6,000, and accumulated depreciation 4,000. Okay, donc هنا just be careful, because this is the effect on retained earnings because of the exercise of 2019. This is the overstatement here of retained earnings because there is no depreciation expense in 2020, and then of course the retained earnings was understated in net, of course, by 6,000. Okay, donc this is a situation when you got this non-counterbalancing errors. Okay. You may go through the other please illustrations. If you got any problem, you can email me. I will be always happy to answer your questions. But we got really a long examples on how to correct for different errors. Even this comprehensive example is really interesting. Okay, so you got different types of errors in the same time. You'll see that you will need maybe this worksheet to be able to show the appropriate, of course, adjustment, and which account to be, of course, adjusted, and what will be the effect also on the retained earnings, etc. Okay, so do you have any question before we follow? No, before you leave. Excuse me. أنا دايخة déjà. Are we good, please?
Yes, all clear, ma'am.
Okay, good. Hope you really enjoy the revision week. Be really ready for the final. Bon, أنا صلحت راهو الميد تيرم malheureusement حبيت نعطيكم les notes, mais malheureusement je me suis pas déplacé لل TBS to get back يعني the names on the sheets. Bon, to be honest يعني فما bien sûr those that failed, but overall on average يعني it was really good compared to the intermediate one. يعني I see that there is really improvement يعني in your grades. Okay, donc well, continue doing your reports. Hopefully you will all succeed or pass the final inshallah, and you get all the intermediate two already validated. Okay, ان شاء الله en tout cas نجم peut-être نبعث لكم les notes ما نتصورش قبل الاكزام الفاينل، خاطر هكا ولا هكا انا با مديبلاسي لي تي بي اس افون الاكزام تاعنا نهار 3. اوكي anyway as I said يعني globally we have really good grades. Okay, bon فما bien sûr 3 ou 4 يظهر لي هكا اللي they failed the intermediate the midterm, but the remaining يعني it varies from 60 70 to 80 etc. Okay, That's all. Thank you for your presence, for your attendance, for your efforts throughout this year. Voila. Do you have anything to add before you leave?
Thank you, ma'am. إن شاء الله لبس.
يعيشك. Allez, au revoir.
سلامة مدام. Thank you, بسلام.
Thank you. Bye bye.